Hey everyone, welcome back to Corporate Decoder, the place where we unpack the hidden stories within your favorite company's financial reports. And tonight we are diving deep into Galaxy Gaming Incorporated's latest quarterly filing. This is not just about numbers, it is about understanding the real game they are playing. Imagine a company where revenue is up but cash is down, where debt is being refinanced and a big merger is on the horizon. What does all that mean for the company and for its investors? Get ready because we are about to decode it all. Alright, so what we have here is a 10Q report for Galaxy Gaming Incorporated, a company that designs and licenses casino table games and technology. They operate globally in both land-based and online casinos. Let's jump straight into the numbers. Looking at their balance sheet as of the 30th of September 2025, total assets are around $26.4 million. Now that is down from about $41 million at the end of 2024. A big chunk of that decrease comes from their cash. Their cash and cash equivalents took a nosedive from over $18 million down to just about $3.3 million. This might sound alarming, but often companies use a lot of cash when they are refinancing debt or making big strategic moves. So we need to see the full picture. Speaking of debt, their long-term debt and liabilities have also decreased significantly. As of the 30th of September 2025, it was about $37.4 million down from over $54 million at the end of 2024. This is likely tied to that debt refinancing we saw mentioned earlier. Now let's look at how they are actually making money. For the 3 months ending the 30th of September 2025, revenue was about $7.3 million. That is actually a small decrease from the same period last year when it was around $7.6 million. But here is an interesting point. Their total digital revenue increased by 11.5%, reaching $2.8 million for the quarter. This shows growth in their online gaming segment, which is becoming a key part of their business. On the expense side, things look interesting. Selling general and administrative expenses dropped significantly by 35.8% for the quarter. A big reason for this seems to be lower costs related to special projects and legal fees tied to the merger. For the 9 months ended the 30th of September 2025, there is a notable item, a loss on extinguishment of debt of nearly $3 million. This is a one-time charge related to refinancing their old debt with Fortress Credit Corporation to a new deal with BMO Bank NA. This all contributed to their overall results. For the 3 months ending the 30th of September 2025, Galaxy Gaming reported a net income of just over $1 million. This is a huge turnaround from a net loss of over $2 million in the same period last year. Looking at the 9 months year to date for 2025, they reported a small net loss of about $31,000. While that might seem like a loss, it is actually a massive improvement from a net loss of over $1.7 million in the first 9 months of 2024. So financially things are improving. Now what is driving some of these financial movements and the company's overall strategy? The big news is the proposed merger. Back on the 18th of July, 2024, they entered into an agreement to be acquired by Evolution Malta Holding Limited. This merger has not been without its dramas. There were some lawsuits filed by shareholders claiming that the merger disclosures were incomplete. The company did supplement those disclosures to address these concerns. Another major event was the refinancing of their debt. On the 6th of January 2025, they secured a new credit agreement with BMO Bank, now providing them with a $2 million revolving credit facility and a $45 million term loan. This largely replaced their previous loan with Fortress Credit Corporation. This move seems designed to give them more financial flexibility. Digging into the details of their intangible assets, we see significant amortization expenses. For the 3 months ended the 30th of September 2025, amortization for intangible assets was about $552,000. These are things like patents, customer relationships, and trademarks which are key to their business. One of the risks highlighted is customer concentration. For the 9 months ended the 30th of September 2025, one major customer in Europe accounted for 19.2% of their revenue and a significant chunk of their accounts receivable. Another customer in North America represented 3.3% of revenue. Losing a major client like this could have a significant impact. So what is the overall picture for Galaxy Gaming Incorporated? On the positive side, their digital revenue is growing steadily and they have managed to reduce their expenses significantly, particularly in selling general and administrative costs. The debt refinancing also seems to be a positive step, lowering interest expenses and the overall debt burden at the end of September 2025 compared to the end of 2024. They are also showing a clear path back to profitability after moving from a significant net loss to a net profit for the quarter. However, there are risks. The significant drop in cash raises eyebrows, but seems to be explained by the debt and merger activities. The reliance on large customers is a classic risk in any business, and any disruption there could hurt. The merger with Evolution is still pending and dependent on regulatory approvals, which adds a layer of uncertainty. In the grand scheme of things, Galaxy Gaming seems to be navigating a complex period of transition. They are retooling their financing and preparing for a major acquisition. Their core business is showing resilience, with digital growth offsetting some of the challenges in traditional casino gaming. Their ability to successfully integrate with Evolution and secure those regulatory approvals will be crucial for their future success. Alright, that is our deep dive into Galaxy Gaming Incorporated's latest 10Q. What do you think about their strategy and the pending merger? Let us know your thoughts in the comments below. If you found this analysis helpful, please give this video a thumbs up and subscribe for more corporate deep dives. And hey, don't forget to join our Discord community linked in the description for even more discussions and insights. Thanks for watching, and we will see you in the next one.